Welcome back to Bull Bear and Brief. I'm Joe Cortucci.
I'm Arpa Sharma.
We're glad to be back with you. We're coming at you a little early this week. We're going to miss out on Friday's return, so there'll have to be a cliffhanger for the next
Yeah.
episode because the next episode we're going to want to make sure we tell you whether we are probably going to get our first L, my first loss. It'll be Arpit's second. He's going to be 0 and 2. I mean, that's
I'm
going to be
stacking
tough
these
for
up.
you, Arpit. I don't know what you're going to do with yourself. But markets are roaring this week, so we'll do a quick market recap. But just wanted to make a couple comments about how lucky I am. I got to go to the Masters this week and watch a practice round. Got to see Scotty Scheffler. Got to see Xander Schauffele. Got to see all kinds of cool golfers and experience a good time with some folks that we learn from in this business. And so that was a really neat experience for me. And then Arpa, what about this rain? We're down here in Central Texas where this watery substance is falling from the
I
sky that we
know.
haven't seen in maybe months and months and months. Are we going to melt and float away or what?
I have no idea. That's not my job. But
Your
I'm
job
just
is to
happy to have
forecast
some
markets,
rain
so why
here.
don't we do that? Why don't you tell us what happened this week and where what your recap is for the first 4 trading days of the week of April 6th.
Yeah, I mean, not to burst that little cliffhanger, I think we take a L this week. Unless the market somehow fall by 4% tomorrow.
Which I wouldn't
The
want.
mark, I think the markets are going to be pretty good so far. S&P is up around 3.7% this year. Russell 2000, the small caps are also up around 3.6. Major indices that did really good this week so far with the industrials up around 5.5, I believe, as well as materials up around mid fours and tech companies and consumer discretionary. All these are kind of to be expected because a lot of these guys have been getting kind of hit hard because of the Iran war. And this week, it seems maybe taco.
Yeah, I
Who
had a
knows?
taco shirt all ready to wear. I have my Let's Go Taco shirt that I was gonna wear, but because we did this show on short notice, I didn't get to put it on. So I'll have to save that for another week whenever he tacos and gives us a rebound that we like in another way.
Yeah, it's a 2 week ceasefire, so you still got next week. You have time.
It seems like it's pretty fragile, but there's a lot of reasons why they both would want there to be a lasting ceasefire. And of course, we're going to leave aside the issue of whether or not this was a good idea. That's for somebody else to
Yeah.
decide. Facts of the matter are we've got a fragile but holding ceasefire. The markets liked that news. That being said, Arpit, we did end up with oil settling around $98 today, which is still extremely
hmm
elevated. We've got CPI dropping tomorrow morning. Is that right?
Yeah.
CPI dropping
We
tomorrow.
CPI dropping. PCE already did drop today. Core PCE did come out. It
Yeah, but I'm
was
saying CPI is a big one that's dropping tomorrow that we'll
yeah.
find out some of the inflation directions. But again, as we talked about in previous episodes, higher elevated oil prices is probably going to lead to maybe some sustained, though it may be temporary, sustained increased inflation. Is that a fair take?
Oh yeah, fair take. I think it would just take some time for us to see it. May not even get it next CPI. We might get it next month, but I think we're going to start seeing some level of inflation. I know I'm definitely paying a lot more for groceries. I'll tell you that much.
Yeah, you pay attention to that close, don't you?
I do. I'm I monitor
are
that
you
every day.
are you what we would refer to as frugal?
No, I spend money. I just keep track of what I'm spending.
What's your guilty pleasure? What do you spend money on if you're going to go to town on something really nice? Bottle of whiskey? Are you a big watch guy? Like clothes? What's your thing? What's your vice?
It's definitely either alcohol or a nice bottle of whiskey. I don't drink too much, but I certainly like to collect, and then as well trading cards.
Oh, what kind of trading cards?
It's just little, little game trading cards that we have when we grow up a little bit. It's kind of
Yeah.
nerdy. Keep it off the podcast.
Yeah. Okay, no problem. We don't want anybody to know how you're really investing your money. So, what else you got on your today?
Yeah, I mean, just brief, some economic stuff. These are a little bit, these might go over the head of a lot of people, but I think these are pretty important things that are driving everyday markets. ISM services, what that is pretty much just a survey of a bunch of service companies. We did mention manufacturing, I believe last week. This week we had ISM services come out. Same thing. It's around a 54, 55. Just so you guys know, anything above 50 is considered good. Now trends,
Considered good?
people it's considered good. Yeah. It's not out of a scale of 100%. No, it's anything over 50 is growth. Anything below 50 means recessionary type conditions there. At least in that particular survey. And it doesn't really matter 54, 53, 52, like in and out because it kind of bounces around and it stays around the same levels. So anything over 50 we kind of like to see. One thing that was kind of expected but also kind of extreme. GDP came out again. So for those who don't know, GDP numbers are released, and surprise, surprise, the guys that release it don't get it right the first time. In fact, they don't get it right the second or even the third time, right? They take several times of just constantly monitoring it. So GDP numbers came out for the fourth quarter of 25, got revised down again. Markets were expecting 1.4, really it was 0.5%. So quarter four was not a
0.5%?
yeah,
Wow.
0.5%. It was a reduction of zero point 0.9, and it's still considered preliminary. It's not considered, the final number. It's still gonna keep coming out. So as more data comes in, right?
Right.
You also take into account that there was the shutdown in, like, the October timeframe,
Which
so
we're
that
shut down
also probably
again
yeah.
currently.
So you still have, like, this continued delay in data, and so that's a pretty important number that I like to take into consideration.
I did
Another
notice that
one
GDP
mhm,
now, I don't know if you pay attention to that, Harper, but I watched the Atlanta GDP now. It's not perfect, and I'm not saying that it's perfect, but I did
mhm,
notice that it went from pre-war around 5% down to around 2.1 right now. So GDP has certainly contracted
yeah,
as the market has also contracted. So it's not just showing signs that the market is going down, but we're also seeing some economic weakness that has really wielded its head here. And typically Q1 is a strong GDP quarter, just seasonally.
yeah, yeah,
So it's concerning that we're seeing it come in because if it comes in too much and drops too much, Q2, Q3, that's when the effects of the higher oil prices will be mostly felt by that consumer who is on the lower end or the middle end. Those are the folks who are going to bear the brunt of this the most. And I wonder how much they'll actually be able to consume if they're spending. Now, my son just sent me a text message the other day. He has a truck, a Toyota Tundra, and he said, "Dad, it was $140 to fill up my truck." So I mean, that's he's
yeah.
like, "It's not supposed to cost that much." I go, "Yeah, welcome to welcome to the real world." So I mean, I mean, what's your conjecture on how this is going to affect your middle and lower consumers over the next? Let's just call it 3 months to 6 months.
Yeah, well, your K economies, everyone keeps talking about it, the rich keep some level of experiencing. It's starting to make that transition now to the middle class and even the upper middle class. When you have high oil prices, that affects almost everybody, even below except the ultra wealthy, right? Middle class, upper middle class people all get impacted heavily by oil, right? And just basic energy input prices and even rising grocery prices at this level. And so again, your K-shaped economy is probably going to become a very weird, you know, really upper K line, and then everything else is straight vertically down, right? It's just almost a no economy for those guys. Now
Yeah.
that's the extreme scenario, right? But ultimately, like it's still semi concerning that if this was to continue, there would be some level of major impact as
But how? I mean, with the
Mhm.
Strait supposedly being open, and we're at $98 oil. So I mean,
Supposedly,
obviously there's concern in the market for that staying the case, but also there has been damage to production. Period.
yeah,
So like,
yeah.
how
I
long is that going
read.
to take to? No one really knows how long it's going to take for that to correct itself. So I think it's just important to know that some of this pain is still ahead, and
Mhm.
unfortunately, we have not felt the full brunt of it yet. Now, again, markets are forward looking, so sometimes you might see uh, relief in the equity markets before you see relief in your pocketbook. So keep
Yeah,
that in
one thing
mind.
oh, sorry.
Go ahead.
I was gonna say one thing I did read recently, just on impact of oil markets, was that Saudi Arabia lost on their east-west line 700,000 barrels per day every single day that the war was happening. Right, there was no production at all coming out. The plants are damaged slightly, so you're having a little bit of a two problems. And the one thing I learned from the oil markets more recently is that they're experiencing two major problems: as stock and flow. And so far, there's been a flow problem, right? The oil can't get out. They have the oil, they just can't get it out. But they were dangerously close to having a stock problem. And when you have that, research says indicates that the true price of oil then rises well above 200.
Could you imagine $200 oil? What would that do? Good
People were freaking out over 98,
Mhm. Well, I mean,
right?
it's elevated now. I mean, that's gonna
Yeah.
put the pinch on a lot of people. You double that, you're talking $7, $8 gas. Is that
Mhm.
fair?
Yeah.
Maybe more?
Maybe maybe more. And then think about that. Think about the cost of fertilizer now. That's
Yeah.
going to impact the cost of your groceries.
Yeah, it's gonna cost, more for vegetables, more for fruits. There's so many things that, like you talked about last week, that oil goes into
Yeah.
that it definitely affects. So,
PVC
maybe think
piping.
about firing up that EV, the electronic vehicle.
Oh, hell no.
You like that gas guzzler, don't you, Arpit?
Yeah, I'll pay I'll pay $200.
Okay, so let me just kinda touch on what I think we got to pay attention to next year or next week.
Yep.
The Strait of Hormuz, it's turned into the market's remote control. Whatever happens in the Strait of Hormuz, is what's probably going to be guiding market sentiment, even if that's not the smartest thing for the market to be looking at. I think we're now at a place where we need to, you and me probably need to start talking about stagflation on the
Yeah.
show. Stagflation is lower growth with higher costs. It's like the absolute worst case scenario. We probably already have mild stagflation. And by that I mean GDP is coming in at 0.5 last quarter and 2.1 for this quarter. We don't know what the final number will end up being for this quarter, but inflation is now running at 3. Core PCE came in at 3. We'll see what CPI is tomorrow. And so we have growth that is below inflation. That tends to be a problem. Thankfully, wage growth has been kind of keeping track. So we're setting
Yeah.
wage growth that is somewhat keeping up with inflation. That's kind of more of the pain index. But if it gets much higher from here in terms of inflation, we could potentially have some problems. So stagflation is a term we're probably going to use a lot on here that I think our listeners are probably going to want to pay attention to, because you got to take action to grow your wealth or grow your income in accordance with what's going on out there with the cost of living and the cost of your real life experience. Small caps are outperforming. I know Arpit loves that. He's a big fan of value
Mhm.
small caps.
Yep.
Bitcoin is trading like a tech stock, not like gold. So
Who would have thought?
a lot of people have asked me over the last 5-10 years, should I be buying, especially the last 5 years, should I be buying cryptocurrency? I always say the same thing. If you're buying it for an investment, it's speculative. If you're buying it for some other reason, like a store of value, or because you think fiat currencies are going to collapse, you can make a case for that, but just understand what you're getting into, understand what you're dealing with. That's also a good opportunity for me to say to everybody who's listening, once again, as I do every week, this is not investment advice. Do not make investment advice based off what Arpit and I are talking about on the show. That is something you do with your financial advisor after deep research, deep thought. We are just talking through how we think and how we make decisions in our own personal economies, and also sometimes with what we do here. But what I'll say about the Bitcoin thing is it's not trading like it was supposed to. It's not acting like a store of value. Doesn't mean it's bad. Understand what it is. It is up substantially this week with
Yeah,
the
seven point
straight,
eight.
with as everything else is, but also it's somewhat correlated or heavily correlated with tech. So I just think it's important that everybody knows that. Anything you want to comment on the Strait of Hormuz, stagflation, small caps, or Bitcoin before we move on from that subject?
No, I was gonna just mention again, like the Bitcoin exposure again. I would like to ask you a question because as a financial advisor, you
Yeah.
probably get asked this type of question. Or you probably have clients that fit this. Is what percentage of do you think of a portfolio should be, if at all, dedicated to just speculative-ish investments? You know,
Well, I
so
think that's a very good question, and I'll break it into two parts. Which is, if you're getting your base built, like you're just getting started, your first thing is make sure you have a good, solid emergency fund. Second, you're going to want to make sure if you're younger, you're investing, getting your fortress built. The fortress is when you have enough money that you can tell anybody, in the words of John Goodman in The Gambler, that's your FU money. You're good to go. I won't use the full word, so we don't have to put the explicit on the. But yeah, if you get to a point where your fortress is strong enough that you don't have to do anything you don't want to do, that comes from investing in indexes, dollar cost averaging, getting started early, and investing and saving and having some delayed gratification. There's really no role for Bitcoin in that, in my opinion. Now, if you're a heavy risk taker, I mean, I know kids that bought Bitcoin when they were 16, 17 years old that have $1 million plus in Bitcoin now because they took that risk. But they took it asymmetrically. They only, put a couple $10,000 in there and then just left it alone versus putting every bit of your savings in that. I think that's foolish to do that in any asset class. But once you get to a point where your fortress is built, I'm a fan of this idea of core and explore. You've got your core investments that you're never going to mess with, and those are your long-term holds. And your explore is where you're really shooting for the moon. Speculative could be Bitcoin, it could be IPOs, it could be pre IPO private investments. There are things, you can do venture capital. Once you're at the point where you have enough money to risk something like that. Because my approach with my explore money, with these things that I'm going to do that are going to be higher risk but potentially game changing returns, is I have to be willing to lose whatever I put in those, like literally have it all the way go to zero. Because to
yeah,
get the type of return that comes with those things that can be game changing and life changing, the other side of that is a lot of those things don't work out. And
yeah,
Bitcoin absolutely could be in that category. I don't think that's the case with Bitcoin. I think it has enough adoption now that it's likely to be here to stay. But in general, once your fortress is built, 3 to 5%, and your explore maybe up to 10 if you're a real big risk taker. As long as the 90 is going to get you all the way where you need to go.
yeah.
Don't risk anything in those areas that you can't live without, or that will cause you to change your desired outcome. So that's kind of how I approach it. And again, I'm probably more of a risk taker, so I've got a lot of money in my explorer area, but I do feel like also my fortress is built pretty well at the same time. So does that answer your question?
Yeah, yeah.
Good, good, good. All right. So, what else you got on the agenda today, Arpa? What else is big for you? What do you think's coming our way next week? Let's make our predictions.
Well, I think, again, surprise, surprise, Iran war continues to be the main story. Um, I think though some things that you should probably pay attention to if you're listening, is keep looking for any more private credit noise. Again, Joe's probably tired of me here
No, no,
talking
we
about this,
like
but
it.
private credit it's a pretty serious thing. Carlisle just got hit today, 15%. Right, Carlisle's not as big as some of the other guys, still 7 billion.
But you're not
So
saying
I
that Carlisle. Hold on. You're not saying Carlisle lost 15%. You're saying they had a 15% redemption request.
yeah, they
So
only
I want to
honored
make sure that's clear to
fives.
our listeners because they probably hear 15% and think, "Oh God, that thing
Oh yeah,
lost
no.
15% in a day." No, clients sought back 15% of the fund's value. It caps at five in most of those cases. So
Mhm.
those funds are not going to give back 15%. They're only going to give back five. But when you have that many people rushing for the door at the same time, it puts pressure on these funds. And I think that's what Arpit is trying to say.
Yeah, and these funds are they're pretty much illiquid investments.
Yeah.
They can't immediately make that 15%. It would harm everybody else, right? So that's why they do that.
That's why those
So
rules exist.
private credit continues to be a big thing. AI, AI is becoming big. I don't know if you saw anything about Anthropic's Mythos. It was apparently Anthropic says this great result, so powerful that they actually had to semi delay it a little bit because it was exposing too many flaws in too many systems.
Yes, it's basically showing you that a very well trained AI in the hands of the wrong person could break pretty much almost all the security in the world right
Yeah.
now in terms of like cybersecurity. Not another thing to make me think that the Terminator that I watched in 1989 or whatever year that was when I was a kid is coming. Is coming for me. When is that AI going to be in the robots that are coming my way to hunt for me?
Yeah, and I'm kind of glad they didn't release it, but probably the DOW already has Mythos. Probably using it right now.
I'm not going to call it the Department of War. I'm calling it the Department of Defense, DOD.
I prefer DOD. I prefer DOD.
If that offends you, maybe you don't want to listen to our show because I think it's called the Department of Defense for a reason, and I don't mean that politically. It's just my opinion.
Yeah.
So,
But yeah, I mean, those are some of the major underlying stories that are getting kind of overshadowed by everything over here, right?
since you brought up the AI discussion, I'm going to ask you a question, which is, and
Yeah.
it comes up a lot. Investors often ask, "How do I invest in AI? How do I invest in AI?" Obviously, most of the companies that are in that space are private. Could you
Hmm.
touch on a couple of ways investors can invest in AI, both as we talk about semiconductors, but also the companies that are making these big investments in companies like OpenAI, Anthropic, Perplexity, so forth and so on. Like, who the big
Yeah.
players? And if a
So
person is wanting to add that to their portfolio, what is the smartest and strategic way to do that? Since many of those companies are private.
yeah, so the best way to play this, I think, uh is to buy, and this is not the most, how would you say, unique advice here, is to buy the big guys that are pretty much just responsible for everything. The heavyweights throwing everything around, right? So you want the Amazon exposure, Meta, Microsoft, maybe not Meta, Amazon, Microsoft, Google as your main guys right there. And then of course, we talked about this before, is buying not just who's going to make the best model, because that's a really risky thing. Now it's starting to get more clear who's really the best model, but then also
Is
buy the
that Claude for you?
for me, it's Claude, and then probably either Gemini. It's actually kind of, you can't really just say who's really the best model because each model does something completely differently,
It's better at
right?
certain things.
Yeah, like, I think Gemini, when it comes to just general chat, is rated the best model. It may have just been overtaken by a more recent ChatGPT. Those guys just keep flip-flopping over. But Claude, when it comes to, like, workflow, is the best, and then when it comes to being able to download it into your own computer and be able to use it, DeepSeek is also really, really, from what I've heard. I don't use it personally, but,
You give them the
these
Chinese access to your computer.
yeah, I wouldn't.
But back
I
to what you
really
were saying.
wouldn't.
What are the ways they can
So,
play? What are ways
and then the
client?
other way would be to buy the guys that essentially give all these people the picks and shovels, right? Your semiconductor companies, and for so long that's been Nvidia, and Nvidia is the main honcho when it comes to selling the GPUs. But there's so much else that goes into semiconductors than just that. There's this entire process, this entire chain, and this entire chain has a bunch of different monopolies at each individual part of the chain. And it's not like a normal supply chain in like a car manufacturing plant where you can just build a machine or anybody can build those machines, right? these companies that are focused on their individual component are the only companies that can really do that well. So the big one that I always talk about is ASML. They make these machines called lithography machines, and it's used in one of the most important parts of the semiconductor supply chain, which is where they actually etch into the metal plate all the little individual chip components and everything that they're going to go in. They actually laser etch it. And this machine, not to talk too much about it, but if you want an example of how insane the engineering is, think about something the size of like those double decker buses in England. Now place that bus on the moon, and that thing can fire a laser and hit a penny on the ground. That is like the level of on Earth. That's the level of accuracy that we're talking about in just that machine. No one can really do it right now.
And no one else but ASML makes that machine, correct?
No one else by ASML. The Chinese have tried to actually break it down and deconstruct it and do it. It's so complex they couldn't. And then they just broke a lithography machine, and then ASML
Gotta love
started
the
banning
Dutch.
that.
That's where ASML is located. It's the Dutch run.
Yeah.
It's a Dutch
So
company. So
but I use that as an example of just how that's just one part of a chain. It's like this massive process. This one tiny process is owned entirely by ASML. That's why ASML is like a $600+ company, is because you, you can't replace them. So everybody knows they're good. So, buying not only just the main big players, but then buying the guys down the line. And this also extends towards quantum. Because I hear a lot of people talk about quantum and qubit and all these other smaller companies. Personally, I think if you're going to want to invest in quantum, just buy into Google and Microsoft.
yeah,
Those are the guys that have these massive divisions.
yeah,
Right? Quantum is unprofitable. AI is unprofitable,
right.
right? But these guys have the cash flow to be able to sustain it going forward, right?
That
So,
is also
you
I
know,
think that's a big thing to know about if you're looking to be an AI investor, and because some of these companies will eventually go public. The promise is great, but the revenue model at this point is not clear. Like where like they can't charge enough in subscription dollars to justify what has been spent on the CapEx. Is that fair to say?
yeah, and that's the big issue with OpenAI is that they're not public, and
Yeah.
so they have no revenue, or they don't have no profit. They have revenue, they just have no profit.
I mean, I send them $20 every month. What are you talking about?
Yeah, my bad. I forgot.
They got at least $20 a month in revenue. What are you talking about?
And you probably use like $300 worth of output from
Yeah,
that's
that's the
pretty
thing, that
much
the power
the
that
scale.
we talk about that. Well, okay, well, let's shift gears then, since we're talking we talk so again, let's summarize that in 2 ways. One, if you wanna buy into AI, buy into the big boys who are playing in it, and then buy the picks and
Mhm.
shovels, which is the semiconductors. Understand that when you're playing in that space, you're playing in a space that is very volatile. So when we were talking about your core and your explorer, this is going to be more on the explore side, although not as exploratory as something that is like venture capital. But
Yeah.
I mean, but semiconductors will move on a standard deviation of around 50% or 40%. It's a very big deviation from the norm. Their average returns are off the chart when they do well, but they also correct very heavily. So proceed with
Mhm.
caution. And remember, this is not advice, it's just conjecture about what's going on. But that's a good segue into other areas. I'm a big fan of infrastructure right now, but also I would put energy into that. One of
Yeah.
the AI commands is massive amounts of energy investment in order to meet the energy consumption that they create.
Mhm.
Now you have where this ties back in with what's going on in markets today. You've got an energy disruption in oil and gas. Natural gas, as I mentioned last week, big part of our electricity infrastructure. We still use a little coal, nuclear. I'm a big fan of nuclear. I'm wondering if some of these micro nuclear companies can come in and maybe build small reactors on site for data centers that can help these AI companies perform better. Now, what are your thoughts there around infrastructure, energy, and where that looks like? I'm looking out the next 10 years as an
Mm.
opportunity more than I am the next week, but kind of give your thoughts on
Yeah,
that.
yeah. So I do like the infrastructure, and as you know, I consider the semiconductor components as part of infrastructure.
Well, it is now, no question about it.
Yeah. And the other big parts are as well as this, the materials, the metals, copper. These guys consume a lot of copper. All the wires have copper in them, as well as just all the other, we call them the special metals, right? You have your silver, you have all your gallium, your palladium, platinum, all these useful metals, all the stuff. So there's infrastructure is now becoming so much more broader than just what a use industrial players, right? Infrastructure now is becoming so much more tech focused, right? Now, what you're asking, you're talking about uranium and nuclear energy. I'll be honest, that's the most out of my wheelhouse. From what I understood, is that nuclear power itself took a long time, but there has been, again, like you said, these new micro reactors. I haven't had the chance to be honest. I haven't had the chance to really look into these guys too much because they're new. They're relatively new. They don't have anything up, right? They don't have anything. It's all like technically at this point still theory and some still in process, right? The last nuclear power plant we created was by a Southern company in Georgia, and that took around almost like 7 years, 7, 10 years to construct because of just regulatory delays. And it takes so long to make a nuclear reactor that what was it? Microsoft and Google said, "Hey, we're just gonna reopen 3 Mile." Right now, I would love for nuclear energy to make its way back up because I believe nuclear energy is the only true replacement for oil in terms of just like
Natural gas.
cost and power.
Yeah.
Yeah, natural gas is good, but also natural gas.
No, I'm saying that nuclear can
Yeah,
do as much can create as much power as natural gas power plants. Oil, you're not going to have a nuclear reactor running around in a car. So
unless it's
oil's
EV.
yeah, again, it could be powering the EV, but you know, I look at the electricity consumption as a very big. It hits people who are
Yeah.
again on that middle and lower income scale. Which, by the way, since President Trump was elected, energy prices are up 13.5%. So they're up a lot. And again, doesn't change my life one bit to have a power bill go up because I've got solar panels on my house. And so I don't have a power bill. But for most people that can't afford a solar panel system, that's
Mhm.
really hitting them hard. They're getting a power bill that is 13 or 14% higher. And that's not a shot at President Trump. That's a reality of natural gas prices going from a buck 40 to $3. And that's what produces our electricity. So the nuclear, once it's built, the heavy capital expenditure up front, it produces electricity for a really long time at a pretty cheap rate and at a very high output. So I'm with you. I'm like,
Yeah.
is that, and I don't know the answer to this, and you probably don't either. Is that a regulatory issue? Is it an environmental issue? Is it? I mean, who knows? It's hard to say. And so
It's
I just look at that and I say we got to do better on that front, or we got to come out with something else because if we're going to be, I guess, hostage to a war that takes place 3,000, 4,000, 7,000 miles away here in our economy, that's probably not the best scenario for us over the next 20 or 30 or 40 years. And so this is what I want our government to do better is to start thinking strategically and stop turning everything into politics and start saying, okay, we have a real issue here. We have a finite resource, oil and gas, that produces a lot of our electricity and energy to move ourselves around. And we don't have a suitable replacement and we don't have a suitable infrastructure for it. So let's be grown-ups, Democrats and Republicans. I'm talking to both of you, and let's make a strategy that's going to transcend multiple administrations so that 20 years from now, we actually have a coherent energy strategy. And if somebody shuts down the Strait of Hormuz, we can, who cares? We can, hey, we're fine. We got it. We got it covered. Like this, to me, this is like the biggest own goal in history. And we've known about it for 4 decades and haven't done nothing to stop it. So, and I hate
and
to go,
we actively made it worse now.
yeah, I was
It
gonna say I
was
hate to get on
fine.
my high horse, but it to me, all of the stuff we're talking about, even though I'm moving on from the current conflict in Iran, it all ends up back in the same place, which is our economy to move the goods and things that we like to do and buy around, or to consume the services we enjoy in the wealthiest country in the world requires energy, and that's a truth. And now you're bringing new
Mhm.
technologies to bear that are going to change the world. I'm using them every day. They change the world. They can change the world for the better, but they use massive amounts of electricity. And if we don't provide that
Yep.
electricity through a safe, sustainable format, we are going to be hostage to anything that happens in the Middle East because they produce 25% of the world's oil. And we are energy independent, but that doesn't mean we're not using oil from Canada or from Saudi Arabia or from other parts of the world because it has different types of oil that work for us. So again, we just got to start thinking strategically, and we have to start, I guess, aspiring to do hard things again and say, yeah, this is going to be difficult. Yeah, it's going to be painful, but we're going to be on a 20-year plan to do this. And even though I might be a Democrat and you might be Republican or other way around, we're still going to get it done because our children's lives depend on it. I mean, is that too hard to ask?
Hey, it doesn't buy me votes today.
I know it's like it's a corrupt, the incentive, the incentives are corrupt. The
Yep.
incentives are like they're misaligned for what needs to happen. Politics is such a short-term zero-sum game, and we American people have become kind of pawns in that, and we've also played a role in not like being thoughtful about who we're voting for on either side of the aisle. About are they talking about and doing things that really matter, or are they just trying to divide us and put us into different corners? And as somebody who works with money, I've always used this rule. Most cases, the money's going to flow to the place where it makes the most sense. But sometimes government can put its finger on the scale towards one thing or the other. I can tell you right now, our government heavily incentivizes oil and gas. I invest in oil and gas every year, and it generates massive tax deductions for me. I'm a high income earner. So government is saying to me, if you invest in oil and gas, I will give you a tax break. That's the government subsidizing oil and gas. So if
Mhm.
there's nuclear or if there's fusion or if there's some sort of other like green energy initiative that actually makes sense, if you subsidize that too, then you're at least giving it a chance to compete with oil and gas that has been subsidized since the 1930s. So that not a political statement. So anybody listening who thinks it is, that's not what it's meant to be. It's important that you understand that we have made choices that have been now decades in the making. We've known about some of the problems that are facing us right now. We've done nothing to change it. And so think about that next time you're going to the voter booths and who you're voting for, and make them talk about this stuff. Ask them about it. Think about it. Research it because it matters, and it matters not just to you, but it matters 10 years from now, 20 years from now. Are we going to continue down this road or not? All right. So we've got 32 minutes in. Let's go. Let's make our prediction for next week, so we can see if we're going to break our losing streak. You're on a 2 game losing streak. I've only got one. So I'm going to
Yeah, you
go.
want
Why don't you go for
I was gonna say, if you want some investment advice, do the opposite of what I say here.
no, no.
No, I'm kidding, I'm
That's
kidding,
why
I'm
it's a
kidding.
long-term game, Arvid, not a short-term game.
Man, this is actually the first time where I'm kind of, like, truly stumped here. Even though I was wrong both times, I was pretty high conviction. Here, I'm gonna go man, I think over the weekend, there's more clarity around this ceasefire deal. Now, just as easily, there could be less clarity and a complete broken deal, like, over the weekend, and I'm completely wrong. I fall flat on my face here. But I think that there'll be continued negotiations. I think Trump he's gonna start
He's
tacoing a
mid
little bit
taco.
here. He's mid taco. He's mid Taco Tuesday right now. So that's where
Yeah,
I'm
there's
going.
painted himself into a corner here where I mean the only
Yeah.
other solution aside aside from accepting the ceasefire where we're giving Iran I think $2 million per ship that goes through the Strait of Hormuz is
Yeah,
what I read. Yeah.
I don't think that's gonna happen. I just don't think there's gonna be because right now there's still like based on the Citrini analyst that's stuck in the middle of the Hormuz right now. It's still relatively closed. Like nothing is going out through there right now.
Well, I guess that's my point. I'm with you. I think they're likely going to continue down the road of getting it hammered out because
Yeah.
there's the other side of that is boots on the ground, and I really
Hmm.
don't think I really don't think Trump wants that, and I don't want it, and I don't think very many of the American people do. Not
Yeah.
that what I think matters, but I think that's kind of the other side of this is you're either going to open the Strait of Hormuz with diplomacy, and even if it's a shit sandwich that we don't want to eat. Sorry for the language, everybody. Or the other side of it is that we have to go and control the Strait of Hormuz with military force, and
Which
we
is
could do it. I mean, if there's anybody listening right now who doubts the ability of the American military, just look at the pilot rescue. It was remarkable work of what they did, or what we did in Venezuela. We are strategically and tactically the most amazing, unbelievable military on the planet. They can do almost anything, but putting boots on the ground means loss of life, means extreme cost, and you're now on another, probably decades long war in the Middle East, which from Iraq and Afghanistan has left a pretty nasty taste in the mouth of the American people. And I think we end up going up marginally next week. The one big caveat, since tomorrow's Friday and we're shooting it early, is if we see a really red hot CPI figure, it could really shock the markets so in a negative way because that's really going to put a kibosh on lowering interest rates. So, yeah, it remains to be seen. I think
Mhm.
the market wants to rally. It's been looking for a reason to anything that it can grasp onto that gives it a glimmer of hope. I want to thank everybody for joining us this week. We're going to continue to try to get, like I said, guests on here. We'll have special episodes where we do that, where we get their different
Yep.
takes. Again, the show is just for fun, just for conjecture, but you're talking to two people, for me, 26 years of experience and working with finance and investing myself. Arpit, who's a CFA, unbelievably difficult designation to get. Don't use this for your own personal investing. Do your own research or work with your financial advisor on that. But listen, pay attention. We're gonna try to keep the show fun. We'll be back with you next week where we will discuss a full week. At that time, we'll see whether or not things collapse. We'll have to amend this week if we see a 5% drop tomorrow, which I do not see coming. But as of right now, I'm 1-1. Arpit's 0-2. We'll see where we end up next week. Thanks for tuning in. Catch us on YouTube. Catch us on Spotify. Catch us on Apple Podcast, anywhere you can. We'll see you next week.